been waylaid by investors on his way, so he was probably a little happy for the delay in time. So Chris, tell us a little more about Legacy.
It's a real pleasure to be here at the Gold Conference. This is our third Gold Conference since we IPO'd back at the end of 2021. It's great to be back above our IPO price. There's a lot of that cohort for the last couple of years that have experienced some pretty tough times. So we feel that as a company, we've been really focused on acquiring projects, developing our assets, and focus on delivering value for shareholders, even though it has been a tough market for junior exploration companies. I'll sort of run through the value proposition for Legacy, why we're shareholders, not just managers in the company, and what the future we see holding for those that are investors in the stock. So we're based in New South Wales. It's a premier gold, copper exploration district. And we've got a package of projects that are both 100% owned and under joint ventures. So we've got around 7,000 square Ks of 100% owned projects, covering 3, which I'll talk about. And then we've got some pretty serious hitters as joint venture partners. Newmont, S2 Resources, led by Dr. Mark Bennett, with Mark Creasy as a major shareholder. Recently, Helix, a Cobar-based explorer, also backed by Mark Creasy, and Earth AI, so an artificial intelligence exploration company. And what they really provide for shareholders is a level of diversity in the stock that gives it a significant amount of resilience. In terms of New South Wales, we think it's a great jurisdiction to explore. It's home to Australia's largest gold mine under Cadia Ridgeway. And what we've really seen over the last 16 months, and it sort of kicked off with our deal with Newmont, there's been around $300 million in joint venture transactions within New South Wales from major gold miners investing. And that includes acquisitions of huge assets like the Cadia Ridgeway mine, up until as recently as 2 weeks ago, Goldfields entering into the Orange region with a private company in a pretty substantial position. So the majors see a lot of value in New South Wales to make these discoveries for large gold copper systems, and so do we. So that's Legacy Minerals at a glance. That was the share price yesterday. We've got a very tight capital structure, and that we see that as fundamentally important to deliver real value for our shareholders by minimising our dilution and giving ourselves as much exposure to share price growth. You'll see our cash usage there. We're a very lean company in the way that we operate. And importantly, we're very active and aggressive in our exploration. I think we're probably going to add another drill campaign to that 2024 pipeline this year. So to have sort of 7 projects drilled is a pretty phenomenal sort of statement to be making as a junior. The joint venture funding, we see it as a critical way to add value for shareholders that's non-dilutive. So that's $28.3 million in JV deals that we've struck over the last 2 years. And importantly, on some of those deals, like the Newmont and S2, we're carried by both Newmont and S2 through to commercial production. So that's fully financed by Newmont and by S2 through to a 20% ownership of an operational asset. We've got quite a spread of board and management. Most of them are here today except Doug, but I'll just point out Dr. David Carlin from Rex Minerals is here. So is Matthew Wall, ex-Rio Tinto, Wood Mackenzie, Tom Wall and Doug are our 2 geos, and Tom and I are actually the 2 founders of Legacy Minerals. So we've got a strategy to deliver value for shareholders, and that evolves around discovery, acquisitions, and partnerships. So what does the discovery side look like? We're actively drilling. We're focused on gold, copper and silver, and we have been since we've IPO'd, and we're looking for tier 1 type deposits. On the acquisition front, we've built our portfolio through predominantly pegging free ground, and that's presents a significant opportunity for shareholders. A good example being that Newmont JV at Ballura. We pegged that for free, $0 about 3 years ago, and to talk about signing on a major to do a transaction on a project like that is quite phenomenal. We spent about $390,000 to build the entire Legacy Minerals portfolio, and those 2 cash acquisitions have occurred most recently with the Thompson and Drake projects. So we've got a mix of early stage and advanced stage projects. And importantly, those partnerships, non-dilutive, so that's money that we don't have to ask shareholders to put in, and it presents us with ongoing multiple share price catalysts. So I'll talk about Thompson. we're really quite excited about this project because this is looking for an intrusion-related type of gold system, and these things have only really come around conceptually relatively recently, and there's been a great excitement in the Snowline discovery over in Canada as a multi-million ounce type deposit. What we see up there is a target-rich environment. It's one of the most underexplored origins in Australia. So it sits in New South Wales, and it represents around 5,500 square kilometres. So it's the largest single gold copper exploration licence in New South Wales. What we see up there is a real pathway towards discovery, and importantly, it's been drill tested in the past, but they failed to intersect the causative body of these large, what we interpret to be magnetic intrusions. So presenting just 3 of the targets there, these represent magnetic bodies, all greater than 100 million tonnes. And you can see the broad zones of alteration and silicification. So what we sort of know through the previous work that has significantly de-risked these targets is that we've got mineralisation in these systems. No one's been out there drilling for the last 10 years, and we've acquired it for $200,000, which gives us a real clear pathway to add value to a significant sort of district scale project. The analogue of what we're looking for out there is a Javier-on-Telfer style system. So 8.4 million ounces, a relatively recent successful discovery by Greatland, and I'll sort of talk about how that JV played out for them as well. But we see a lot of similarities with these bullseye magnetic features on the project. So on to Drake. Drake is another acquisition that we're sort of in the final stages of tidying up. And what we really see there is a legacy project that has had a strong historic focus on the gold and silver. And what they've left off the table is some significant copper targets that we're going to be testing on the project. We picked it up for $190,000. We estimate there to be at least $20 to $30 million in previous exploration expenditure, as well as about $20 million in sunk infrastructure on the project. So for those that like valuations around companies and what a sunk infrastructure gives as a head start, we're well poised to sort of really deliver on that project. It does have a resource, 320,000 ounces gold and 23 million ounces silver. So that roughly equates to about 53 million ounces silver equivalent, or about 600,000 ounces gold equivalent. So it's not an insubstantial project. But what we really like about it is the fact that we see this system as prospective for a Porgera, big magmatic Pacific Rim style copper gold deposit. So we're not really interested in 600,000 ounces here. We've got a multi-million ounce size target on the project. So why are we up here, or what got us interested in the project? And it's really the extensive high grades we see. So that drill hit there, 12 metres at 48 grams gold, 2,500 grams silver, has a high grade interval with almost a metre at 230 grams gold and close to 10,000 grams silver. So you're talking about some of the best gold hits that you'll sort of see around the conference today. You couple that up with larger broad zones, 118 metres at 1.7, as well as some other fantastic hits across the project, and importantly, some great copper hits. So 16 metres at 5.8% copper, and 10 at 7.6 in the same drill hole, less than 100 metres. So the fact that you're talking about some phenomenal hits there, all shallow, close to surface, certainly gives a really good indication for the economic potential of the deposit. And what we also see is significant upside in the resource, noting that those 3 drill holes there aren't in the actual MRE. So we see a lot of growth potential to blow out that gold, silver, and bring in the copper to a big resource. That's just a bit more of that copper opportunity that sort of just demonstrates how limited drilling there has been for copper. And when they did hit copper, they didn't follow it up because it was deleterious towards the gold-silver production potential on the project. So the last project I'll talk about that we own 100% is Black Range, and we really picked this project up off the back of the work that we were doing at Ballura when we started to realise that New South Wales was an underexplored space for these low sulphidation epithermal systems. So we did the deal with Newmont. We picked up Black Range, which is in the same geology, and the last company that had been on ground down there was Newcrest over 30 years ago, and they walked off when they found Cadia Ridgeway back in 1992. So we've been the first company to be actively on ground doing exploration, and it was quite soon after this that we also picked up Drake. So we've really tied up 3 of the largest low sulphidation epithermal systems in New South Wales. And what we see at Black Range is really a lot of parallels between the work that we're doing with Newmont at Ballura in exploring for these large, extensive, low sulphidation epithermal systems. We're looking at a project there that has a significant number of mineral occurrences across a huge distance, and some pretty phenomenal rock chips just kicking around at surface that we picked up a couple of weeks ago up in the northern area of that project. We're planning to continue to develop this project as well and look for further drilling opportunities as we advance it. So in the last 5 minutes, I'll sort of run through the joint venture projects because it is a strong focal point on what we see as a value driver in legacy minerals, and it does make us stand out to a lot of other companies out there. You can't just really go out and say, I'm going to get a joint venture party and sign a deal. What it does take is projects that are prospective. They need to demonstrate growth and potential. And when we talk about, what are the types of projects that, say, Newmont look for when they're looking for a tier 1 epithermal gold system, they're targeting 500,000 to 700,000 ounces per annum, 10-year mine life. That's what gets Newmont out of bed. They've only done 2 deals in Australia in the last 3 years, which is a JV with Legacy and the acquisition of Newcrest. So it sort of demonstrates, I guess, the scarcity in attracting these majors to do these types of deals. And why do we do them is this. You can be a minority owner in a multi-billion or multi-trillion dollar project and see more than 10 bag share price growth. There's some great examples there. And I just sort of point out Greatland Gold as one of the more recent WA ones. A market cap growth from 58 million to 1.4 billion based off a 30% ownership of a Newcrest-sized project. That's now 8.4 million ounces. Newmont consider that to be too small, so they're actually divesting that project at the same time that they're funding ongoing exploration on our ground. So we just sort of see that as demonstrating, all we really need out of any of our one joint venture projects is a successful tier 1 discovery to be made for that to represent serious growth for our shareholders. Our market cap at the moment sits around that sort of $20 million mark for perspective. So talking about Newmont, we've got some drill assays pending. We're sort of heading towards our 3rd drill campaign down there this year on the project. So it's tough. Earlier in the year, we did some more recently, and we'll wrap up some towards the end of the year as well. They're spending up to $15 million over 8 years. And what we really see as fundamentally important in that joint venture deal is what happens at the back end. Is this 20% ownership pathway towards a substantial stake in a large-scale mining operation? So Newmont will fund subsequent drilling. They would fund subsequent mineral, resource development, scoping studies. They fund all the capex required to put into production, and we're carried all the way through. And then we repay our 20% out of operational revenue. So it's the same deal terms we've got with S2R, and essentially it gets a free carry through to production. It's a large system. It's located quite close to Cow, which is another large epithermal system in New South Wales, and some pretty extensive grades and strikes at surface. Fontenoy is a bit of a different proposition, and we're really tapping into a company here that's doing work on the ground using artificial intelligence, and they're delivering results. It's been a challenging space for a lot of AI companies in the mineral sector, but certainly AI have made a genuine greenfields discovery of a magmatic nickel copper sulfide system there, 10 metres at 1.2 grams gold. They've done some follow-up soils, and you can sort of see where the planned drill holes are. If they're getting the types of numbers that they got in some of the lower order soil anomalies, we're really quite hopeful around what the drilling is going to show on this project. So again, this is another project that's been actively drilled at the moment. Glen Logan, so we picked up this ground November last year. So again, a $0 acquisition cost, and within 3 months, we'd signed a deal with Dr. Mark Bennett, who's farming in on our ground to drill this target. Deep, conceptual, undercover porphyry target. So very, very high risk, but very high reward. That's why the S2 team are out there. Rio Tinto identified it in 1994. They considered it too deep to drill back then, with a target depth of 800 metres. We think it's a lot closer to surface, and that's being managed by S2. And again, that drilling is currently underway. And then lastly, just the deal we signed recently with Helix out at Cobar. Fantastic prospective bit of ground, downstrike of the CSA mine, downstrike of the Peak Gold mines. Helix are an active Cobar-based explorer, and we saw it as a great opportunity to put it into another a deal that sees Legacy exposed to the ongoing work that they're planning to do out there. And we're expecting at the pace of exploration that they'll probably be drilling this project as well, and there's a minimum commitment to do so. So that's the drill results for the rest of the year. As I said, we've got 4 campaigns planned, as well as the drill targeting. So there's multiple sort of share price catalysts on the table for shareholders, as well as the organic value that sort of sits in the Legacy portfolio. And just to sort of wrap up the final sort of key investment highlights, I talked about that right structure, the competitive market cap that provides us the room for growth, the tight capital structure, and that $30 million in non-dilutive funding. The right people, we've got experience across all stages of exploration, development and mining, track record of making discoveries and securing funding. We've got the right ground, high grades of gold, copper, silver, and targeting tier 1 systems. And lastly is that active drilling. So, we're really looking for those discovery catalysts, and that's what adds value for shareholders at the early stage in the exploration life cycle. So thanks all for your time.